Let's quickly talk about LLC distribution rules. Let's say you have an LLC and you have one member, two members, three members, multiple members, and you're trying to figure out exactly how to distribute the profits that actually are being derived from the LLC. So here is an overview I want you to pay attention to. So let's first define the terms that we are going to talk about. So what is an LLC distribution? So this is basically a process whereby members, in other words, the owners of an LLC, take money out of the LLC bank account and issue profits to themselves. Okay, this is very, like, put simply, this is members just taking money out of the company. So instead of receiving income in the form of a W-2 salary, aka wages, the LLC members pay themselves via LLC distributions. Okay, so this is pretty straightforward. So how does an LLC make distributions really? Well, the thing here is that you can make an LLC distribution in several ways. For instance, via check, internal transfer, electronic funds transfer, so EFT, wire transfers, including SWIFT, cash withdrawals, including ATM, transfer from an online account like PayPal, Venmo, Stripe, Zelle. So this is really, you have a large variety of payment transfers here. The most common methods are writing checks and bank transfers. And when we talk about LLC distributions, it's really important to understand that there is an element of timing here. So how much and how often should members take LLC distributions? Well, it really depends upon your specific LLC. It depends on the operational viability of the business, the revenue profile. In other words, has the LLC derived the revenue in the last, let's say, in the last 3 months, the last 6 months, 9 months, year? Okay, so how much profit gets distributed to each member is determined by how much of the LLC each person owns. In other words, their membership interest. So this is called a proportionate distribution. So when we talk about, so we have two cases. You have, for instance, when you have a single member LLC and you can have a multi-member LLC. Now, in a single member LLC, things are pretty straightforward, right? So you are the only person, you are the only member in the LLC, the only owner. So you will get whatever profit is available in terms of money you can use, money after you take care of the operational needs. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about some of the important requirements you need to have when it comes to LLC distribution rules. It's important to remember that multi-member LLCs must make distributions to all members. Okay, so if a member in a multi-member LLC wants to take a distribution, then all members must take a distribution. This is one of those things where and the rules, this rule is applicable across the board in all 50 states. Okay, so I want to repeat. If a member in a multi-member LLC wants to take a distribution, then all members must take a distribution. Keep in mind that distributions are proportional to how much of the LLC each member owns. And so let's really, I want to go a little granular here. How does a proportionate distribution work? I was talking to you earlier about the fact that the distributions are proportional to how much of the LLC each member owns. Okay, so how does it really work? Well, the thing here is that when you are talking about proportionate distribution or proportional distribution, it's all about the equity that the person invested in the LLC. So if for instance you invested 40% in the LLC, and basically according to the operating agreement, the LLC's operating agreement, you are entitled to 40% of the profits that the LLC has derived, then basically you are going to get 40% of whatever money is available for distribution. And this money may not be equal to the profits, right? Because let's say if the LLC has made, let's say, $1 million in profit, maybe you might decide that, all members might decide to only distribute 300,000 or $250,000, because you do not want to distribute the whole profits. You want to keep a little bit of the cash within the LLC. That's called retained earnings. So when we talk about retained earnings, that's revenue that you do not want to distribute or invest, but keep within the company, because you never know, right? For rainy days. So this is important. So a proportionate distribution is based on the equity stake or the whatever percentage was agreed upon in the operating agreement in terms of profit distribution. Boss, I want to quickly remind you of today's topic. We are having a conversation about LLC Distribution Rules. I want to talk about a very important document. And I think a few minutes ago I alluded to it, but now I want to dig a little deeper. So I want to talk to you about the operating agreement. So your LLC operating agreement sets distribution rules. This is why it's really important. First of all, I just want to say that an operating agreement for an LLC is not a mandatory document from a regulatory perspective. In other words, state authorities are not asking you, they're not mandating that you create an operating agreement. But you want to have an operating agreement because of things like distribution rules, of things like if a member wants to leave the LLC, if a member wants to enter the LLC, if a member wants to take a distribution, what are the rules? What are the requirements? This is all of these things you clarify, you elucidate in the LLC operating agreement. Okay, so this document set distribution rules. What I want to say here is that the LLC operating agreement controls how and when LLC distributions are made. Typically, the operating agreement provides that LLC distributions are made when the members or managers decide to make a distribution. And members or manager decide this by voting at a meeting. Now, the thing is, a meeting can be a simple phone call, group text message, or email with all the LLC members or managers. Okay, so, but the thing is, all LLC managers or members must be present. And the LLC operating agreement template that basically you can actually get it online. As a matter of fact, it really depends on how complex your LLC is. If you have a simple multi-member LLC or a single-member LLC, you can go online and you can just download a template and you can just create your LLC operating agreement. However, if you have, let's say, quote-unquote, a complex LLC that or just the operations are a little complex, or you have multiple members, let's say you have 10 members or 20 members or 30 members, then it really makes sense to actually hire an attorney to sort of like formalize everything, because the last thing you want is to write something that nobody's really comfortable with. People do not understand. So you need to be very granular and very clear as to what you want. So it's always better to just outsource the task to a professional. It is really important also to think about bookkeeping. So you got to keep track of LLC distributions. You know why? Because first of all, the money comes out of the retained earnings of the business. Number two, you want to make sure that you know how much you have distributed to each LLC member versus how much the LLC has generated in revenue. Number three, you need to keep track of LLC distributions for tax purposes, because at the end of the year, you will have to issue something called Schedule K1 to each LLC member. And this is mandatory for like the IRS mandates this sort of this document. So when you file a Schedule 1065, for instance, if you decide to like if your LLC is filing as a partnership, then you need to actually file Form 1065 at the end of the year, and you need to actually attach Schedule K1 for all members. Okay, so make sure you keep a record of each distribution. For example, you want to make a copy of the check or save a printout of the wire transfer. Alternatively, you can review your bank statements and identify the distribution or distributions. Your accountant will need this information at tax time. Very important. And if you have a multi-member LLC, there should be a separate record for each member's distribution. Okay, and so LLC distributions affect your taxes. And how? Well, the thing is that, first of all, I need to explain. LLC distributions are not taxed. Instead, LLC profit is taxed. So because you owe taxes on the LLC's profit, you don't have to pay taxes again when you distribute that profit. Keep in mind, though, distributions are derived from the LLC's profit, right? Retained earnings. So said another way, tax is owed regardless of whether money is kept in the LLC bank account or distributed to the members. So the thing is, as long as you have a profit, the IRS want to have a little cut of that, okay? Whether you distribute it or not. Now, do you need an accountant? Well, the short answer is yes. I mean, we strongly recommend hiring an accountant to help with your taxes, and we suggest you hire a bookkeeper if your business has a large volume of transactions or has employees. There are lots of other issues connected to LLC distributions, especially at tax time, that only a qualified accountant can help you address. You can also talk to an accountant about this more sophisticated distribution setups that we don't discuss here. Like, for instance, you have preferred membership interest. This means if you make a larger capital contribution, not proportionate to your membership interest, you will get money distributed to you before the LLC distributes money to the other members on a proportionate basis. And then you also have guaranteed payments. So this is actually a type of operating agreement provision that requires the LLC to pay the members on a set schedule. Unlike LLC distributions, guaranteed payments are taxed as income for the members. Boss, I want to quickly remind you of today's topic. We are having a conversation about LLC distribution rules, and so we are going as granular as possible here. I want to give you a bonus here. If you're still here with me, I want to really talk quickly about LLC distributions versus salary. And the thing here is that you need to understand, business owners may talk about their salary, but generally this is not how owners are paid. You pay a salary to an employee, but as a business owner, the way you are paid depends on how you form your business. You need to know how to pay yourself after you file a limited liability company. You pay taxes on LLC based on the election you select with the IRS, either as a sole proprietorship, S corporation, or a corporation. Okay. And so the difference between salary and LLC distributions is that salaries are taken out before distributions are made. So basically, by default, the IRS considers all single member LLCs as sole proprietors and multi-member LLCs as they are considered general partnerships. What does this mean? This means that if you are a single member LLC, you are going to file Form 1040, and you're going to report your income on your Schedule C. And if you are a multi-member LLC, you are going to file Form 1065, and you are going to attach to that form Schedule K1 for all the members. And the thing is that Form 1065 is an information return, so you don't pay taxes at the corporate level, but you just file the tax anyway, so that the IRS knows what's really happening, so the IRS can reconcile the income that each member has generated. Okay, and if you file as a corporation, you're gonna have to file Form 1120, and if you file as an S corporation, you're gonna have to file Form 1120S. It's important to understand that if the business wants to be taxed as a corporation, it can file IRS Form 8832 to make the election. Okay. Once you file the election, it is good for 60 months, and the business is taxed under the election until then, when it reverts back. When electing corporate taxation, the members pay personal income tax the same way they handle a dividend. Every other entity uses pass-through taxation. Every member is solely responsible for reporting allocations and paying taxes on them. However, they are not responsible if others have failed to comply. So this is really important to remember. Now, how often can an LLC make distributions? Well, it really depends. It really depends on profits. It depends on the operating agreement. It depends on the LLC members as well. So the LLC has a choice of when it wants to take distributions, and it may refrain from making them if members agree. Likewise, the members may agree to give more frequent distributions as well. Let's quickly talk about LLC draw versus distribution. This is an important comparison to really have here. So the thing you need to understand here is that for taxes, a distribution and a draw are totally different. Totally different. A single member LLC is able to draw money from the company. However, the accounting transaction does not appear on the owner's return. On the other hand, a distribution does appear on the owner's return. So you're not an employee if you own a single member LLC and do not receive a regular paycheck. Okay, so basically, if you are a single member LLC, we are talking about a draw, not a salary. You're drawing cash from the LLC. But if you're a multi-member LLC, we're not speaking about a draw. We're talking about a distribution. Very important to really understand that. Now, do LLC distributions have to be proportionate? Not always. No, not always. Everything depends on what? the operating agreement, right? This is the quintessential documents you need to really pay attention to. Everything that the members have agreed on, the court and the state authorities will honor it. So this is why it's quintessential for an LLC, whether it is a multi-member or a single member, to have an operating agreement. So by default, the state's laws allow for the allocation of the LLC's profit to the members based on the percentage of ownership that the member holds. So if you and a friend own a two-member LLC, with you owning 30% interest and your friend owning 70% interest, you receive 30% of the allocation and your friends receive what? 70%, right? Now, if the members make personal contributions, the LLC may actually make different arrangements, allowing those members to receive a higher percentage of the profit upon return. This is where the flexibility in management comes into play and why it's really important to clearly list the allocation amounts in the LLC operating agreement. So this is one thing I want to specify here. Now, another common practice is preferred returns. This is when a contributing member receives a higher amount of a return and receives his or her portion first. What I want to say here is that the ownership interest of an LLC is tracked in the member's capital account. Capital accounts must include a member's allocated profits and capital contributions. Distributions are subtracted from the account balance, so the member's ownership is easily identified. Each state governs the LLCs formed in that state. Let's talk about a major element here. There could be some liability for improper distribution. So when it comes to distribution, there are some laws that prohibit LLCs from completing a distribution if it will make it impossible to pay debts that come up, and when the business is showing more liabilities than assets, especially when the business reports losses for several years. Right? The whole thing is it's all about what? Cash inflows and cash outflows. If a business, if an LLC in this case is losing money, how come the LLC is distributing cash to its members? It doesn't make sense. And so the courts and the states and state authorities and the IRS, for that matter, are making sure that there are rules and there are sort of some kind of restrictions around distribution. The LLC manager or member who completes the distribution is responsible if this is incorrect. However, when another member knowingly accepts, they are also held liable. And again, the rules here is actually uniform across the board. Now let's talk about distributions upon dissolution. So let's say an LLC has been in existence for many years, and for whatever happened, for whatever reason, they are going to dissolve the LLC. So what are the rules around distributions there? The following distributions must take place after dissolution. So an LLC must actually distribute all funds when it wishes to terminate the business entity. Creditors must be paid first. And when I say creditors, I'm talking about the IRS too. If the LLC owes taxes, the LLC must pay the IRS as well. And by the way, when I say the IRS, I'm also talking about state tax authorities, okay, state and city tax authorities. And so first of all, creditors must be paid first. Then the members owed a prior distribution are paid. After, the LLC must return all excess funds to each member who made a contribution to the company. Finally, each member receives a fair share of excess in the form of profit distribution. So they are dispersed according to the operating agreement as well as state laws. So this is the only situation where state laws might prevail, because it is understood that after this distribution, this is like the terminal or the final distribution. After this distribution is made, then there's no more LLC. So state laws at that point really prevail. So the bottom line here is what? When we talk about LLC distribution rules, we are talking about three important things. Number one, the operating agreement. Everything has to be inscribed in that document. Number two, fairness. You want to make sure that people are getting paid. The members are getting paid according to the proportionate doctrine. In other words, whatever was inscribed in the operating agreement, this is exactly what is followed. And the third thing is that you need to really make sure that the LLC has enough money before it distributes the cash to its members. So if the LLC cannot honor its debts, its taxes, whatever it is, whatever liabilities he has, it cannot distribute cash to the members. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about LLC distribution rules. So I give you the overview. I explained to you what an LLC distribution really is and how does an LLC make distribution. We'll talk about multi-member LLC versus single-member LLC distribution rules. And then I also gave a little compare and contrast between LLC distribution and salary, draw, and all that kind of stuff. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.